Interest rates are making it very unobtainable for Airbnb hosts and real estate investors to break into the real estate game in general. Or are they? Because actually I was able to get this little house right here for a 3% interest rate. Yeah, that's right. When other investors are out there getting 7, 8, 9, 10% interest rates on their mortgages, I was able to lock down this little bungalow for a 3% interest rate. And that's what I really love about real estate and the Airbnb game in general, is that you can break into it for honestly less money than you probably think. And there are so many ways you can do it, ranging from rental arbitrage, co-hosting, glamping, creative financing, or in the specific case of this house right here, seller financing, which is exactly what we're gonna be talking about in today's episode of Raw Built. Now we're gonna get into the actual terms of this seller finance deal a little bit later, and you're not gonna believe how I even found this deal, so you're gonna wanna stick around until the very end of the video. Apparently it's landscaping day in my neighborhood, so we're gonna continue inside. Let's go. Well, I don't hate AC, but the trade-off is that it's way more echoey in here. That's totally fine because the actual content is good, right guys? So let's talk about what seller financing actually is. The basic concept here, all right, I'm gonna have to talk very quietly because it is echoey, but the basic concept here is that with seller financing, the seller is actually financing the purchase of the property to the end buyer. So instead of bringing in a lender/bank, the seller is choosing to act as the bank in this specific situation, and the buyer will be making all of their payments straight to the seller. Now there are benefits on both sides, but it definitely favors me in this particular instance as the buyer because I didn't have to go to the bank, I didn't have to go through the crazy underwriting process, I didn't have to dig up all my financial docs from before I was born, or that Chipotle burrito receipt from 2013 where I got extra guac in my bowl and they were like, hey sir, what is this? You don't qualify for this loan. And I'm like, I was literally in middle school, and they're like, it doesn't matter. And I'm like, it does matter. Whew, yeah, sorry, PTSD. It's hot, it's getting to me, the AC's not working. Anyways, I get to cut all that whole process out with seller financing, and I just have to qualify under the criteria that the specific seller sets. And in my case, that criteria was submitting a personal financial statement, which basically outlines all my assets and liabilities, and a credit report. He checked both of those things, they said you're a qualified buyer, and that was it. It was literally the easiest real estate transaction I've ever done in my entire life. It honestly still feels too good to be true. But really, aside from cutting the bank out, I would say that my favorite part about seller finance is that I'm able to negotiate my terms and my down payment, whereas when you work with the bank, you have to work under whatever programs they have available, meaning that you may have to put down anywhere from 15 to 25% down to close a loan, on top of all of the crazy restrictions that come along with all the different loan types, like FHA loans, commercial loans, conventional loans, all that stuff, all that mumbo jumbo I just said, don't even have to worry about that with seller finance. It all comes down to what you negotiate with your seller, what they're comfortable with, and what you're comfortable with. There's a lot of negotiation, there's a lot of wiggle room that you just don't have with banks. And that is by far the biggest benefit of a seller finance deal. So naturally at this point of the video, you're probably thinking, well, Rob, why would a seller ever even agree to finance the purchase? That's crazy talk. I'll never find a deal like this. Yeah, I get it. That is totally normal. Honestly, when I got into this whole seller finance world, I was also really skeptical that these deals actually existed, but my mindset changed when it was explained to me that not all sellers are looking for that big cash payment when they sell their property. Because when you think about it, when an investor has a home completely paid off and they sell it, they're gonna have to pay capital gains tax on the profit, which in this case was the entire purchase price because it was paid off for the seller. And so the purchase price for this house was $410,000, meaning that the seller would have a hefty tax bill associated with this actual transaction, and he didn't want that. He didn't want to have to pay taxes. Now, the reason this was actually great for him though was because I'm just gonna be paying him every single month, and he'll be taxed every year on the payments that he received from me. So he's still paying the taxes. It's not like he's escaping the taxes forever.
Oh, thank God. I'm so sorry.
He's just paying way less at a time versus one giant lump sum.
2 hours later.
Oh, I've done this so many times. Versus one giant lump sum. At the end of the purchase. So hopefully that gives you a little bit of context and insight as to why seller financing would actually benefit a seller. Now let's get into the part that I know you've all been waiting for, and that's the actual terms of this specific deal. So initially the seller's asking price was $435,000. They wanted a 10% down payment, and they wanted 5% interest on this property. Now the seller is an investor himself, and that actually helped me out quite a bit in this deal, because when I ran the numbers at 5% at $435,000, well, it wasn't gonna work. It wasn't gonna cash flow, was actually gonna lose a little bit of money. So I gave the seller a call and I walked him through the math and I said, look, investor to investor here, I would also like to purchase this house and have it as an investment property, but as you can see from my numbers, it is actually gonna lose money every single month. So we went back and forth a little bit and I basically gave him two sets of terms. I said I'd give him his 5% at $390,000, or I'll give him $410,000 at 3% interest. So he called me back, he's like, what are you trying to do? And I'm like, look, I'm just trying to structure a deal that cash flows for me. And if the interest rate is important to you, then we need to adjust the purchase price so that I can make money. And if the actual purchase price is more important to you, then I'll give you something closer to your number, but I'm gonna need a lower interest rate to make that work. And so the other benefit is that the actual listing agent for this property was his wife. And so I said, look, instead of me bringing in a realtor and then taking 3% out of your profit, why don't we just work with your wife and we can have her facilitate the sale? And so ultimately we landed at $410,000 at 3%, which I believe makes my principal and interest in the neighborhood of about $1,500 a month, plus another $400 to $500 for interest and taxes. So my mortgage payment for this property will come in at around $2,000 every single month. Not bad for this house, which is in the best neighborhood in Houston, Texas, and will ultimately make me some money on Airbnb. And by the way, I told you the terms of this house, but a lot of you are probably wondering, is there a balloon that's associated with these terms? Meaning, do I have to pay off the entire balance within 5 to 10 years? And the answer is no. This deal is amortized over 30 years and it matures in 30 years. So I'll never have to worry about a balloon payment. I'll likely never refi because I got a 3% interest rate. Boom, baby. Boom, baby. Gotta love it. Love it, 3%. I never thought I'd get that rate again, but here we are in 2023 locking down insane deals. Insane deals! By the way, I've put together, can you see my legs in this? You sure? No, I don't want my legs. People get too distracted and then they start crushing that like button when they see my legs. By the way, hit the like and subscribe button if you're getting value from this video. Bring it in, bring it in. Come here, come here. You know, I wanna tell you the really cool part about this specific deal, okay? The best part about this deal is that the seller of this property actually owns 150 other units ranging from single family homes to multifamily properties here in Houston, Texas, that he wants to sell off a little bit of every single year, and he wants to seller finance all of them because he doesn't want to pay capital gains. And guess who is first in line for all of those deals? Your boy Rob Built. And that is super exciting. That is the best part about this deal, is that not only did I get a 3% interest home, but I'm in line for 150 other units over the next few years. Beautiful. As far as the actual plans for this house, is this landscaper back? Carlos! Just kidding, it's Miguel. Anyways, I can say that, I'm Mexican, it's fine. Rob Built, canceled. Okay, as far as the actual plans for this property, when I initially bought it, obviously my mind is always going towards Airbnb, but I actually wanted to buy it from my parents because it's a couple minutes away from my house. Literally, we walked here from my house, and it's always been a dream of mine to not, this looks crooked. Is this crooked? And it's always been a dream of mine to buy my parents a house. They immigrated here from Mexico. They gave up their lives there. My dad was a doctor there. My mom had a great life there. And they sacrificed so much for us moving to America and giving me the life that I'm so grateful for. And so I offered this to my parents. I said, hey, I'll buy you this house. It's yours. I'm gonna cover it. Please live next to me and come take care of my children like every day. This was about half the size of their current house. The lot is only 2,500 square feet, so it is very small. They graciously declined because they didn't want to downgrade in space, and I totally get it. So since they've declined, I'm now gonna move forward and turn this into an Airbnb. There are a few small little remodels that we're gonna do, nothing too huge, but if you can see right here, we've got a deck. I would actually like to extend this entire deck out here and make it into a pergola and do like a hot tub right here and build a little privacy fence over here because you can actually see into the street, to the neighborhood and all that kind of stuff. So I want this to feel a little bit more serene and private. So I'm gonna be enclosing this entire space here, mostly because, as I've mentioned on the channel before, amenities are really huge on Airbnb, and this house doesn't really have amenities, so I'm gonna create that. And the only other remodel that I'm gonna do on this house, I'm gonna try to keep it as basic as possible because I actually think this house has a ton of character and it's very, very cute, is replace what I call Texas landlord tile, which is basically this square tile that you see right here. It's like this 10 by 10, very just not aesthetically pleasing tan beige grayish tile. And we're gonna replace all this tile with laminate flooring, and that's pretty much it. This is a 100-year-old house. It's got good bones, it's got a lot of good character. It's a very cute home, so we're gonna try not to change too much about the historic nature of this home, but we're gonna spruce it up a little bit. I'm sure you're wondering, well, Rob, how much are you gonna make on Airbnb? What are the numbers here? Did you just ignore the chainsaw on the back? Why do I do this? Why do we do this? I don't know. Let's just, hoping the remodel is gonna be done within about a month. I'd like to have this listed on Airbnb within a month, but it'll probably be like 2 months. I'm not super rushed on this, to be honest, guys. I got other bigger projects that are a priority. I know you're wondering, how much are you gonna make on Airbnb? After running the comps and looking at my expenses, this one is not gonna be a home run for me. I'm gonna say that right now. I'm gonna be making about $1,000 a month in cash flow, which I actually think is fine. I'm totally okay with that. I posted this on Instagram and a couple of people were like, oh, only $1,000? And I'm like, dang, all right, Richie Rich. I remember back in my day, $1,000 was a lot of money. But regardless, not a home run, but totally a single. And remember, when you're building your Airbnb portfolio, your real estate portfolio, it's not all about home runs, right? Sometimes you need your singles, your doubles. You gotta load up those bases before you can ever have a grand slam. So this, in conjunction with everything else in my portfolio, is ultimately gonna help me build wealth for me and my family. And the ultimate dream is to leave this portfolio to my kids. They don't know that. I'm not gonna tell them that. But you know, that's the ultimate idea for all of this. I shouldn't be this winded just walking, but yeah, anyways, the cash flow is a little bit on the lower side, but when you factor in the cost segregation and the bonus depreciation I'm gonna get on that property, it actually should be a little bit closer to a home run, but I'm predicting I'm gonna get about a 20% cash on cash return, and that is not including the tax savings that I'm gonna get on this. And as a friendly reminder, if you need a cost segregation report done, we can do that for you over at strcostseg.com. We are the best in the industry and definitely the most reasonably priced. All right, this is the end of the video, and as promised, I'm gonna tell you how I got this deal. It was this really crazy process. Like, I had to do all these crazy scientific things to get it. I was driving in my neighborhood and there was a for sale sign in front of the property that said owner financing at the top of it. And I called the number on the sign and I talked to the realtor and I made an offer that day. Opportunities are out there. Sometimes they are hiding in plain sight. And that was the deal with this property. It was on the market for over 60 days. And for whatever reason, people didn't want it. They didn't want the owner financing. They didn't want the house. I don't know. It's crazy. I still can't believe it to this day. Remember when I said it still feels too good to be true? It still does, because I called, they accepted my offer, the seller was amazing, super flexible while we negotiated the deal, and I was able to lock it down because I took action when the opportunity presented itself. And when you examine all wealthy real estate investors out there, they all have one thing in common. They take action when opportunity presents itself. Catch you on the next episode of Raw Build. Bye.